everyone, and welcome to March's edition of the Trident Take. I'm Josh, the co-founder of Trident, and today I'm joined by Seth. Seth, thank you for joining.
Thank you.
Seth, March was pretty big in the investment space. We saw over $1 billion invested into kind of from the venture capital space in the US specifically. Wiz acquisition with Google being notably the largest, and the big splash in the ocean of what, $32 billion. Any thoughts on that?
Yeah, I mean, look, it's an amazing acquisition. I think you've got a lot of Israeli founders now saying, that's nothing, watch what I can do. And I hope they're right. I think it's going to take a little while for us to see some more of that size, but I'm optimistic. But I think it's also a recognition of just the success that some of these companies have had, and the size they've been able to grow to on their own, right? And if Wiz hadn't been acquired, and to be fair, it could still not go through, right? But either way, right? Like Wiz was in a position to start looking at going public. You've got others that are certainly approaching that as well, right? Armis, Clarity, a bunch of others. And I think it's just an indication of the demand in the market and the size these companies can grow to. And what we're seeing is that's now having an impact on the overall ecosystem, right? Wiz acquisition aside, where we're starting to see the big Israeli companies that historically have just been the acquisition targets now become the acquirers as well, right? Where historically we saw, companies like CrowdStrike or Palo Alto, which acquired two of our companies in 2023, Checkpoint, and these other guys come in and do a lot of the acquisitions, these big multinationals. Now you're seeing the Israeli companies that a few years ago were called the startups get to a point where they are the big players and they are buying, right? Wiz acquired two companies, Gem and Daz, in the last, a little over a year. Armis acquired three companies, right? You're seeing more of these companies become the players that drive value to others down the ecosystem. So I think it's a great sign of the maturity of that market and where we're going to go from here.
Do you think off the back of such an astronomical figure, talk about Wiz, that it's going to hinder, it might be too early to say, in terms of the investors seeing demands from founders saying, hey, you can see the potential of exits now, that's the benchmark. And do you think that's the outlier versus the norm? And are we having to still kind of almost create some more realistic optimism amongst the founders that, hey, that's great, but might not be you?
I mean, look, right now it is the outlier, right? But the first one's always the outlier. But yes, I mean, I do think that I will say as a seed stage investor, right? I don't want to have all the startups suddenly coming to me saying, hey, assume a $32 billion outcome. Let's price this round based on that.
Yeah.
Because I don't think that's realistic today, unless there's a lot of proof points behind it. But look, I mean, the acquisition market of the just Israeli cyber ecosystem is what drives the valuation. And it's the reason that Israeli seed deals are a little bit more expensive, or are a bunch more expensive than other countries. It's justified when you look at how quickly they get acquired, the size of those acquisitions, relative to companies from other countries. The Israeli ones actually justify the acquisition, the investment sizes we're seeing, right? If you look at the biggest acquisitions worldwide in cyber, they tend to be Israeli, even though it's a country that is, a tenth of 1% of the world population. So,
size of New Jersey, right?
Yeah. So do I think I'll see entrepreneurs saying, let's jump the numbers? Maybe, but I'm going to push back on that until I see, a few more of these.
Nice. So that's the optimistic, super exciting side of what happened in March. Let's talk more realistic and back down to earth tariffs. In your space particularly, sorry about this, but what are you seeing? If not, it might be too soon in terms of the impact, but are we affected in the SaaS space?
So not directly, right? I mean, SaaS offerings are not getting hit with tariffs. But, right, I mean, if you look further down the stream, every technology product today is an AI product. Those AI products rely on hardware to train their models, run their models, and that hardware is going to be more expensive. Now, semiconductors are exempt from the tariffs right now. but there's still all the ecosystem that goes around it, and we're going to see those costs rise for physical infrastructure to drive those models. I think optimistically, if I look at it, the cost of training these models has been going down. So even as the cost of the underlying infrastructure may go up, hopefully we're sort of at an equilibrium where the costs are kind of where they are. And we've seen that companies can build tremendous value with the current cost structure. Now, would it be better if those costs were lower? Absolutely. But I don't see the tariffs having a major impact on the software industry in general, and especially the cyber market. Like the threats are only going up. The costs are something I think are manageable. And like even if there is a worldwide economic downturn, cyber is one of those things you kind of need, right? Like you're not going to cut it just because things have gone down. Like you still need to protect your infrastructure. You're still driven by regulation in a lot of cases. It tends to be a lot more stable than other segments of the market because of that.
Yeah, good points. I also think to add to that, the offset of it now requires less software engineers to build a product, right? Like you just said.
I think there's a lot of places where we're starting to see cost savings driven by AI. And so, I mean, again, like as costs may go up in one area, the other pieces tend to balance that out.
Yeah, so at worst, hopefully net neutral, but let's see.
What does that do? Let's flip this around. What's that do for your business as a recruiter if we're replacing all the people with AI?
Hey, this isn't the point of the interview, but yes, good point. Look, we are enabled by AI in certain basic things like creating a templated job description. Let's just say that, right? That, hey, it cost me a half an hour of time. Now it takes me 3 minutes, and then I just got to add my flair and personality and the company culture to it. I don't think we're seeing yet like the exec level what we hire into be affected because AI is currently smashing the kind of BDR low level high volume output, right? So I do worry if I'm a recruiter working for an agency that is high volume cold calling outreach, that's not really putting much emphasis and onus on like the community piece, the immersion into the market and being really close to the investors and out on the ground. I think we're somewhat resilient to that, but we're definitely looking internally at things like note takers and like other aspects just to enable us and help us be more efficient. But I also do believe we can do way more with less in terms of headcount. We're looking at it operationally, marketing wise. But in terms of the actual metrics of how's the market doing because of AI, good, like really good. We're working closely. So we've seen an uptake in Q1. I've seen a lot of our competitors that I know and we speak often have all had way over 100% revenue in Q1. So things are looking good. RSA is looking really busy. So let's see. But we all know what the buzzwords will be at RSA this year if I was a gambling man. But so hopefully only positive signs. So
no, I mean, look, whether it's sales or cyber, right? I think AI is a huge enabler for the really skilled people, and that's where you guys operate. It's where the people we're working with operate, right? And so now we're not going to replace those people anytime soon. We're just going to make them a lot more effective and let them keep up with the market changes.
Yeah, and I think you'll see a lot of headhunters sticking around the 10 to 20 headcount as firms. So reducing costs or limiting costs, but being more productive in terms of revenue. So I think particularly in a high value market like we are with a very high barrier of entry to build a search firm like what we do. So hopefully it's better for us in terms of acquisition targets and strategic moves. So let's see. Seth, appreciate you joining. It was good to wrap up March.
All right. Thanks, Josh.